this panel, we're going to focus on raising capital with security tokens. Definitely a hot topic we hear from our own security token advisors, consulting and advisory arm. And so as a little bit of background on myself, Peter Gaffney, head of research at STA. So I'll lead a lot of the research initiatives, the advisory consulting work. Recently the team published Blockchain Explained on Amazon, followed that up with our State of Security Tokens 2023 Q2 report, sponsored by Coinbase. Q3 is in the works. So for any industry partners, any big updates, send me a note after this. I'll be sure to include that in the upcoming piece. But the best part about kind of our positioning in the market is working with all the industry partners, all the brokers, the banks, the issuance platforms, anything in between and way beyond that. And so it's my pleasure to kind of host this panel. We're going to look at raising capital with tokens, kind of how that differs from traditional raises, what some of the people who are on the ground, boots on the ground on the forefront are looking at and hearing from their clients right here on the panel. So without further ado, Richard, if you don't mind starting us off with intros one more time, and we'll kind of kick it from there.
For sure. Thanks for having me on the panel. My name is Richard Luftig. I'm a managing partner at Castle Placement. We're a FINRA licensed broker-dealer. We were founded in 2009. We have 40 bankers located around the country and around the world. And we have been focused exclusively for 15 years on raising private capital for companies and funds. We've been pretty successful. We raised multiple billions of dollars for our clients. We span all industries, sizes, equity and debt stages. We've raised a lot of money for startup companies, for contrarian companies, balance sheet lenders, real estate, technology, aviation, fashion, you name it. We built the platform based on the thesis that to do a proper capital raise, you really need to be a data technology company and a full service investment bank and fully integrate those two practices. And that's what we've done. We have an app called the CPGo app, and it's a way for companies to find investors, for investors to find companies, for clients to participate in the transaction actively. And we have jumped in the last 2 years into Reg CF and Reg A equity crowdfunding. And we also built an ATS and got that approved a few months ago to facilitate secondary trading of private securities. And we are extremely bullish on tokenization, although a little reticent about many of the challenges for it to be widely adopted. But when it is, we hope to be an important player in the ecosystem.
Beautiful. Thanks, Richard. And Castle Placement, been following you guys for a while, so always good to hear. Etan, I know you guys are nearby in the city. Why don't you kick us off next?
Sure. Thanks, Peter. Etan Butler, I'm the founding chairman at Dalmore Group. We are a FINRA and SEC registered broker-dealer investment bank headquartered in New York and founded in 2005. We're also a technology company, perhaps primarily these days, a more and more so a technology company that has been developing tools to assist issuers who are raising capital online at scale globally. We've worked with over 1,000 companies, including over 315, I believe, Reg A issuing entities. Clients of ours and have completed over 1 million Reg A investments, over 200,000 secondary trades, and super focused and also bullish on the continued growth of some of the Jobs Act-born securities exemptions, and excited to be here with the esteemed group of professionals around here. So grateful to be a part of it.
Awesome. Thanks, Etan and Dalmore. Claus, talk to us about yourself and DigiShares.
You're muted. Yes, thanks for inviting me here. My name is Claus. I'm the CEO of DigiShares. I have a background as a researcher. I have a PhD in computer science. so no finance background, which is sometimes a problem in this industry here. We started DigiShares about 5 years ago, and today we are one of the leading providers of technology and infrastructure solutions for tokenization. So half the business is about providing a white label end-to-end turnkey platform for tokenization of real-world assets, having functionality for investor onboarding, actual investment using fiat crypto, share capital management, distributions, internal trading, and so forth. And we have more than 150 clients globally in more than 40 countries using our platform. The US is our biggest market right now with 45 clients. The US is also, I would say, in many ways, the easiest markets for us to operate in. We also have a transfer agent license, and we're getting a crowdfunding license, and we are launching, as the second half of the business, we're launching our own exchange, especially for real estate trading based on blockchain technology, hopefully in Q4 in the US to begin with. We are generally, I would say, we don't assist with any kind of capital raise, I would say, from our business, right? We see ourselves primarily as a technology provider, but of course we are dipping our toes a little bit with the exchange. So that's looking forward to the discussion.
All right, thanks, Claus and DigiShares. And Bob, what's going on with INX? How are we doing?
Hey guys, thanks for having me on this panel. As always, well done, Peter and the team at Security Token Advisors. I shared a stage with some of you guys as well in the past. It's good to be here again. I'm with INX. I head our sales, business development, capital markets function. We are a 6-year-old company, but the first 3 years were spent with the SEC, getting through a F1 prospectus to basically launch and run the first ever blockchain IPO in US history. And we did that successfully about 3 years ago. We raised $85 million from 7,000 plus investors, retail and institutional investors in 60 plus countries around the world. Investors were able to invest using fiat or cryptocurrencies. And we effectively proved the model that you can raise capital from retail investors around the world underpinned by blockchain technology while giving them the same investor protections that they would otherwise expect to receive in traditional securities. We since acquired a bunch of licenses. We're a transfer agent. We run an ATS. We are a broker dealer. And we also have 48 money transmitter licenses to date that allow us to offer a cryptocurrency trading platform. And we've done a decent job of complementing the cryptocurrencies platform with the security token platform or vice versa. And effectively, they are one platform. It's our flagship product. It's called INX One. Investors can go there and invest in a bunch of security token offerings, which are currently live. They can do that using cryptocurrencies or fiat. So since then, we've had really a great run of, kind of penetrating this space. Of course, it's early days. But we think we've positioned ourselves very well, including a bunch of partnerships, which I'm happy to speak about on this panel. What a wild ride it's been. And it seems like, it's just going to continue and get even more exciting. So, happy to be here.
Definitely. Yeah. Thanks, Bob and INX. Always happy to hear the story. And listen, this is an interesting panel makeup. It could be kind of pseudo-competitive, could be cooperative, collaborative, whatever you want to say. I think after this, even and as the industry continues to expand, we're seeing there's a big challenge in raising capital as a whole on the macro picture, let alone with kind of new technology underpinning things. It would make sense in the future if worlds, all of us, let's say the 5 of us here, start to converge a bit more than expected, or maybe even more than 2021, 2022, whatever. But I want to look at this, on a couple levels. So there's raising from the Jobs Act, like Etan mentioned, raising from retail, raising from creds, raising with kind of the fintech underpin, and then raising with, let's say, underpinned by tokenization. So more broadly, I would love to hear how you guys are all seeing deal activity throughout 2023, whether from like a generalist perspective, if there's any certain industries or sectors that are catching your eyes. If Reg A is really taken off, if Reg D has been a little stagnant, if Reg S happens to be the most popular, I'm curious just kind of some general commentary as a whole, token notwithstanding, but just general business practices. I don't know if any of you want to kick that off.
I will. First thing, I wanted to just comment on the word that you suggested, competition. It's a really funny industry, in my view, because it's so massive. Capital raising is just such a gigantic opportunity marketplace that we don't think about competition at all. In other words, every one of our competitors can 5x their business, and there would still be massive opportunity for castle placement. So and that's a joy, because there are other industries that are razor thin margins and everyone competing in a very small pond, and it's probably not a lot of fun. This is a lot of fun, because every time I see someone doing a successful transaction, that's usually beneficial for castle placement. So it's nice to be able to root for other people in your industry, as opposed to trying to crush them like a grape. In terms of the marketplace, I would just say that investors, we found, are much more selective today than they were a year and a half or 2 years ago. It's private equity, venture capital have definitely reduced their investment volume. I think equity crowdfunding is probably about flat, but other people on the panel might have a different view on that. I don't think that it's grown tremendously. I think it will grow tremendously, but and the last thing I would say is that we're having a lot of success in off-road contrarian strategies, roll-ups of industries that are in distress, balance sheet lenders where they're making private loans where banks used to make loans, and the like. So.
Awesome. Etan, you seeing anything similar with Dalmore?
Yeah, no, I share your views, Richard, as far as abundance thinking. There are 30 million private companies just in the U.S. alone, and my assumption is that many of them are not even aware of the alphabet of these exemptions, like CF, D, A. What does that mean? What do I do? What's a platform? There's such an opportunity, given that these are such new exemptions, to educate entrepreneurs and founders that they have a bunch of different solutions that go beyond friends and family and trying to convince an investment bank or a VC to give them a shot. They can really take control of their own destiny in a lot of ways through some of these exemptions, which really ultimately make it as easy as placing an invest now button directly on your website in a compliant, organized, obvious way. But that's pretty revolutionary when you think about it, because it allows for pretty much any company to take whatever structure and valuation structure and terms that they're comfortable with and offer them to the masses, to their own customers and followers, and be able to solicit and market that offering in many places throughout the world. And that's a very powerful tool that allows for companies that have a community or have a fan base or recognize the value in marketing and promotion to consider utilizing. So we're doing a lot of work just trying to educate the overall industry and the financial industry that these exemptions exist. What's interesting that we've seen is that given the relatively low investment minimums in these offerings, right? $1,000, $100, in some cases $1, right? A lot of what we do is on the fractionalization side. It's not necessarily the best word to describe it, but it really is, you take an asset, you decide what's the price per share, call it $1. You don't necessarily have to tokenize it to achieve that. And then you offer these shares out to a community, to the masses, to RIAs, to whatever that might be. We're seeing a lot of growth in that area, and bullish on that continuing. As far as tokenization, our clients were approaching us with a lot of questions about tokenization and blockchain. It was more so a year and a half, 2 years ago or so. I think a year, whatever that was. Time goes by so fast now. Less so these days, or perhaps more so immediately these days. But in general, it's been issuers have not been approaching us with those needs or those interests. Instead, they're deploying strategies similar to some of our other clients who are offering good old-fashioned equities. However, from a investor experience, these things seem immediate, right? You could transact right away. You could buy a $1 share. You could buy a $10 share. You could build a portfolio. And oftentimes there's not the inclusion of blockchain or tokenization. That said, we recognize the tremendous benefits that blockchain and tokenization present, and believe ultimately that whatever's most efficient and cost effective is gonna succeed. So I know that a lot of other participants here on the panel and this one in general are really building in that direction, and look forward to hearing more about what you guys are focused on.
Yeah, very interesting. Is Etan, is that Dalmore digital or is it Dalmore direct? Correct me if I'm wrong. Where you're like placing a. No.
Dalmore Direct is an invest now button on your website, typically for like a one and done CF, A, or D. Then we have an API version, we have an enterprise version, and we also have Dalmore Fraction, which is a white label app that we build for our clients, that our clients own, that we develop, that has all of the plumbing, escrow, KYC, payment processing, custody, ATS options, access to RIAs, et cetera. So we're building out a transfer agent we have as well. So really we're offering that single sign-on experience, really trying to reduce as much friction as possible, because we've noticed that this industry operates a lot more like e-commerce than it does investment banking in many ways because of the low investment amounts. These are someone's considering making $100 or $1,000 investment, oftentimes on their credit card from an iPhone, that's responsive to something that they see online, behaves differently than an investment banking opportunity where you're talking to an advisor and you're looking at comps and doing diligence, right? It's a very different behavior. So the need for automation, friction reduction, world-class UI UX is critical, as much as it is so for a Shopify store and abandoned cart technology, et cetera. So that's really what we're seeing the most of. What we haven't seen is anyone, regardless of how many investors or subscribers that they say they have, offer anything significant on an ongoing basis of value to issuers who are looking to raise money from retail investors. It is ultimately, in my opinion, on the issuer's shoulders. The question is, what are other people doing that are succeeding? Not what is a salesperson telling you should expect from my million registered users. Usually that's crickets, right? That's what our experience has been, or they're marketing their own products, right? So the question is, how do you utilize marketing, promotion, syndication effectively to get an adequate return on advertising spend? And that's critical, especially if you're a yield-based issuer or a REIT, which we have many, right? You have very, very thin margins. So you really have to, try to figure out how to win before you start. And that's what we're really focused on.
All good points. The e-commerce piece is an amazing analogy, or kind of parallel, if you will. I mean, combine that with what Richard mentioned, how just big the market is. And when you really look at it, how many potential issuers could come through, who they could work with. I mean, there's plenty of room. And I'm sure even if there's something like a retail level raise through, let's say, a Dalmore Direct type, and then even complemented by a typical banking process on an institutional or a higher level, let's call it. I think that's also very feasible. Something we have some interest in from our clients. All interesting. And then you mentioned even it's kind of on the shoulders of the issuer. Bob, obviously INX had one of the more successful raises in this space, I would say. Unbiased, just speaking. I think you guys raised around 85 million a couple of years back. The INX token. Was that a heavy user base target, or was that a fresh thing? Curious what that looked like.
Yeah, it's very interesting when we look back at those days. Remember, that was the height of the bull market, right? That was a whole different, there was a whole different excitement around crypto assets at the time. the fact that regulation was coming was kind of, becoming clearer and clearer at the time. Some of the major failures hadn't happened yet at the time. And the way so we kind of clearly we rode the wave of that, just the times and the excitement that was out there with the bull market then. But we were very organized when it came to marketing and distributing that raise, and deploying our team and our resources in the ways that people who had relationships or that had expertise in marketing in previous roles where they had done things with the technologies available in marketing and distributing or kind of generating the feeling of FOMO and being able to kind of create this, this is a once in a lifetime type opportunity, or you kind of want to get on the bandwagon, now and get onto this investment. Those were things that we were able to kind of strategize around and say, how do we actually push this message out there? And of course, we had because it was an F1 prospectus, we could basically take investors from, countries all over the world. So we were able to kind of harness the time and do that. Now, times are different now. It doesn't change the fact that the responsibility still rests squarely on the issuer, right? To create that emotional connection between what they're raising capital for and the investment community that they're targeting. And of course, we'll support them, and I'm sure all of the other platforms out there will do things to support them and potentially even guide them along the lines of here's how you could actually have a more effective marketing campaign, or here are some relationships that you could leverage. Here are some marketing agencies that are looking at STOs, because that's the other thing, right? There's marketing agencies that will shill your NFT projects, right? But they're not necessarily suited to going out and promoting a security token offering and speaking the right sort of language and knowing what to say and what not to say. So there is definitely a need to really focus on having this distribution mechanism. And I do think that there's collaborations that need to happen for that to succeed. And there's no reason why we can't, try and get some of the key players, whether it's, broker dealers, whether it's some of the other guys, that are running similar solutions, to really figure out the right way to kind of promote this new investment opportunity within traditional investors, like your accredited investor crowds, investment groups, and so on. One example is the way we are looking at a partnership with Republic, which is one of the largest crowdfunding platforms, and an investment capital raise solutions platform in their own right. We have just gone into an agreement with Republic. They've taken a stake in INX, and that gives us access to a much larger investor community. But then, like Etan says, it's one thing to have a large community. It's another thing that they're engaged and that you're offering them investment opportunities that are exciting to them. And when you look at demographics and the different kind of personalities that will exist and the different investment opportunities that they're looking for, you could have millions of investors, but only a subset typically would be interested in specific types of investments and might be there looking for those types of investments. So you kind of need that community, yes, but you need the deal flow. You need that marketplace with exciting products where they can filter and choose and look at these various investment opportunities. So there's definitely a concerted effort that has to happen, and we're definitely working on that as attested by this partnership that we're closing here. But always, and I think everyone else will share this same thought process, is to keep the door open for potential collaborations and partnerships to kind of achieve the goal quicker.
All good points, gentlemen. And Klaus, I believe you guys are indeed raising capital now with the security token offering.
Yeah, it's actually a normal crowd safe, and it's on Republic. We are allowed to tokenize a crowd safe, but haven't decided yet. So I totally agree with what Bob is saying. We operate in exactly the same way, right? We recommend broker dealers, marketing companies, and so on, but we really take no responsibility for the capital raise itself. we get lots of requests from companies that want to use tokenization as a vehicle to make it much easier for them to fundraise without having a real understanding of how it works and the challenge of fundraising and reaching investors without any real plan and budget, right? So we normally reject that kind of clients. Pretty much, I would say all our clients in the US are doing Reg D and Reg S. It's easy and it's fast and it's efficient, it's inexpensive, right? So it's easy for them to do, and they can target accredited investors in the US and any type of investor outside the US. So that works actually quite well normally. They can market as much as they like. But as a tokenization infrastructure provider, right, we always explain to our clients that tokenizing the asset in itself doesn't really make it worth more, right? The asset itself or the project itself has to be of value in itself, and then tokenization is just, I would say, an infrastructure or add-on to make it easier to onboard investors, to add some liquidity, and to automate and reduce cost, right? But it's also, of course, about fractionalization and democratization. That's one of the key value propositions of tokenization. So in reality, we need to be able to reach retail investors longer term and smaller accredited investors, I would say, in order for tokenization to really reach its long-term promise, I think. And retail adoption globally is coming quite slowly, I would say, seen from our perspective, right? And it's also in many countries almost impossible for retail investors to participate. But we do see the trend going in the right direction. So we are very much working on real estate tokenization. And if you look at the trend for individual investors invested into REITs, it's increasing every year. And that indicates, of course, that there is an increasing interest from retail and small investors into real estate or real world assets. They are learning what it is, and they're learning how to invest into it, and they're learning how important it is to diversify into it and have part of their savings invested into this asset class. The other trend that we're tracking all the time is wallet adoption. Tokenization is not going to succeed if not enough people use wallets, and that's luckily also increasing every year. So with those two trends increasing, we'll see tokenization in a sweet spot in a few years.
Okay, understood. And that's, of course, looking at it from like a retail, more digital asset side, that makes a lot of sense. I think what I'm even a bit more curious about, just given some of our clientele and conversations we're having, is it really feasible to raise capital, not from retail, but from larger accreds or even qualified purchasers, just at lower levels? So we see a lot of the whole democratization of investments with tokenization and whatever. And we still see a lot of these offerings on the bigger side are for QPs, even with a $20,000 minimum buy-in. The common, rejection or rebuttal is, this does nothing for the average man, the commoner, and QPs could afford millions. But if you're a low-level QP and you have to rebalance or you need new allocations, it'd be tough to put even like a fifth of your portfolio into one product. Maybe it has a $2 million buy-in. I don't know. Are you guys seeing anything? Let's say a private credit firm is looking to raise capital, take advantage of some distress situations these days. Is it really feasible to raise something like $20 to $50 million? Would that be something doable with the Jobs Act, or is that something a bit more removed and takes a bit more grunt work on like the traditional banking side?
I'd say logically.
Yeah.
So yeah, let me go first on that one. Logically, when you look at some of these institutions that hold, crypto assets, and have done for some years now, there's clearly institutions out there that embrace the technology, the investment opportunity. Maybe they are looking for, getting exposure well before the rest of their peers do, and kind of getting a real good head start there. These guys understand wallet management. They have, institutional grade wallet management policies, and they'll use, well-recognized custody solutions, like whether it's a Fireblocks or a BitGo, and so on, and maybe take a MetaMask institutional as well, and put that policy wrapper around that, and be very comfortable with managing self-custody of their assets. So there's, that's a niche, or that's a target group that could easily pivot into investing in security token offerings, right, in various other industry verticals. Whether there needs to be a concerted effort to kind of demonstrate I would assume that what they're looking for is choice, right? It's a depth of investment opportunities, or a broad spectrum of investment opportunities. If you take trade finance, for example, invoice factoring and account receivables, this is a space that kind of has been dominated by large banks or non-bank institutional players, where your smaller family offices or high net worth individuals, I probably would like to have a slice of that pie, right? There's, capital preservation. There's a whole, some of these opportunities could be low double-digit, yields on your investments, right? There's a lot of good opportunities out there. I think there is still potentially it's an education thing. It's about pushing these product offerings in front of them, and actually engaging and going through that process of educating and demonstrating that while you already have exposure to cryptocurrencies, there is security token offerings which are poised to actually dwarf, the cryptocurrency market. Pay more attention and come in and but you would need to have, again, you need to have that done in a concerted effort. Otherwise, you're going to bring in a handful and still not fill those raises. So again, coming back to what I was saying earlier on, it needs to be, I think, it needs to be a group coming together and identifying a strategy that works, and then working together to push that in that direction.
Okay, interesting. And so Bob and Claus, you both mentioned wallets, actually. So perfect from the digital asset side. And I'm curious, Etan and Richard, what your opinion is. Looking at it, even if you're talking to more traditional investors, is the infrastructure still a big hindrance in their entrance? If you have an offering and you're trying to push and say, hey, this is going to be tokenized with so-and-so partner, we're going to, help you onboard with them, or maybe it's you guys offering the technology yourself. Is that a big hindrance, or, are they hear wallets? Do they run the other way? Are they kind of open to that? Does it change the whole game? Yeah, I guess what I'm really asking is, what's the challenge from the infrastructure side? And is it really that big of a challenge, or that big of a wall to get over?
Wallets, how we refer to wallets today, is more like Stripe wallet, and which allows for, like, I guess the equivalent of like Applied, that allows for a investor to link their bank account to a platform, right? So that funds could go both directions and could get distributed back to them. Less so about with cryptocurrency. And as far as the other question you asked, like, is it reasonable to raise $20 million through Jobs Act exemptions? Yeah, it is. I mean, first of all, 506C, it happens frequently. We have one client that's a combination of Reg D and Reg A that's raising $30 million a month, minimum, for the last 3 months. That's a lot, right? So the question is, how are issuers doing this in this environment? What tools are they using? What PR strategies? What does their return on advertising spend look like? How do you learn from that and mimic that going forward in an automated way, and anything up until then? But as far as wallets, I don't know, Richard, are you seeing wallets as a hindrance in working with clients? Are you seeing an interest in the usage of wallets for crypto related transactions?
It's a major hindrance.
Yeah.
If you really think about it, for an investor to pull bad phraseology, for an investor to commit to an investment, everything has to align. They have to love the opportunity, the industry, the management team, the strategy, the track record. All of the technology also has to be in line. And if the investor doesn't currently have a crypto wallet, the probability of them creating one just to invest in this transaction is very, very low. And that's a huge obstacle. And by the way, that was something that we were debating 5 years ago. And 5 years ago, we were having discussions with clients that wanted to do token issuance. And we said, 99% of our investors don't have a wallet. Do you want to play those odds? And that was 5 years ago. Is it better today? Yes. But is it a hindrance? Absolutely yes.
Yeah.
Yeah, I think it really comes down. I think it makes sense in a lot of cases for a lot of, at least let's say, major asset managers who want to be issuers in this space to kind of go the retail and then just, keep it separate on the institutional side. Retail would be the pure wallet. We're rotating crypto holders. We're rotating, Etan, to use your word again, e-commerce users in a way into our brand. Whereas institutional, and we've even learned this from some of our clients on the STA side, a lot of their business flows through existing either fund admins or custodians or certain banks that are distributing their products, and they're not going to really roll the dice on anything major. We still see some good promise of, smaller funds or even kind of tester funds that are still on the radar. And that's something that could probably rotate eventually to maybe even, probably Reg D, but, maybe to a more retail crowd even should the stars align. But it's always interesting to keep in mind and to kind of balance the whole, crypto narrative with what's actually going to work to get capital in. I think a lot of these stuff, and this is aside from our topic here, but a lot of the money market stuff we're seeing is interesting because it's getting new companies, some major firms familiar with the technology at least, and getting their teams kind of up to speed. Hopefully the spillover effects are as strong as they could be. But always very interesting. And, that's kind of where we're leading up to. I know we have a few minutes left here. It's more like thinking about how do we really scale the infrastructure? Again, there's a lot of different solutions kind of pieced out in the industry now. How does that become a little more collaborative just so to benefit the issuer? So if I'm trying to raise, say, 100 million, I may have to work with a few different parties, a few different brokers. How can I really piece that together and then get my optimal scenario? So I don't know if there's any color that anyone wants to kind of present on that front or any parting thoughts, but I'm all ears.
Well, I would say one thing. I would say that it's kind of unfortunate the way this has all played out over the last few years, because starting with the ICO nightmare, okay, where companies just raised capital with complete disregard for securities laws and regulations. Now most of the headlines regarding crypto are focused on, trials and criminal activity and, fraud and regulatory problems. So that's not an inducement for people to jump into the pool. With all that being said, the opportunity is massive, okay? I think without question, corporations, assets, they're going to be tokenized. It's going to happen. Not tomorrow, maybe in a year, maybe in 3 years, maybe in 5 years, but it's going to happen. It's inevitable. Everything comes together, Web3, general internet connectivity, the equity crowdfunding, the payment rails, the marketing strategies. It's all coming together to help investors get access to different asset classes, and they want it. They want it in their regular accounts. They want it in their self-directed IRAs. And, the people on this panel are going to deliver it. So it's going to happen, but it takes time.
I absolutely agree with that. There's a lot of stuff that needs to happen and that we're all working on. And whether that is, support for, multiple wallets or, blockchain agnosticism, and the ability for assets to move, across chains and live on different chains. The gamification of the entire experience, right? That whole kind of UI, UX, that's critical. Regulation needs to change. Again, to your point, like the media right now, it's awash with, news about trials and this backdrop of everything that's happened. But let's also look at the regulatory the strong-handedness of the U.S. regulator in these last couple of months as well, which you could argue, right, regulation is needed, but maybe the approach and the way things are being done could actually be off-putting to new entrants into this space. And I think that's just the cycle that we're going to look back one day and be like, well, there was the positive initial phase, and then we went through the challenging phases with the trials and so on, and then we hit the next bull run. And a lot of shops that raised capital during the last bull market, they're quietly working and developing products and solutions and bridges and things like that. So I definitely look forward with a lot of excitement, Richard. I share that same view. This is all inevitable, and we know that stuff is happening, whether it's within our own firms here, or also at the large institutional traditional finance level. We saw the move with Citibank 2 weeks ago, I think it was, with their tokenizing or creating a tokenized way to basically represent assets across all of their different business units. That's huge. That is huge stuff. Of course, the adoption is going to take some time, but there are many things that are happening and will continue to happen that will just propel us in that direction.
Absolutely. All right, gentlemen, we are just about at time. Really appreciate all the insights here. I'm sure the world will continue to collide going forward, just given what we're talking about, given licensing, given the necessities and components, and given the landscape. So I'm looking forward to more of that. I'm sure we'll have some mutual clients in the near time. But really appreciate everyone, Richard, Etan, Bob, Claus, for joining. Amazing insights. Hopefully we stay in contact moving forward and enjoy some other panels coming right up.
Thank you very much.
Thank you.
Bye.